So there are individual opinion, and still we find scholars who who consider this acceptable from Islamic point of view. But on the other side, we have collective fiqh bodies who have shown their opinion in the form of resolution, and these all bodies are almost unanimous in deciding that present insurance is un-Islamic, but it is possible to bring Islamic alternative for this insurance. So among these respectable fiqh bodies, we have Islamic Research Institute of Al-Azhar University, Council of Grand Ulama of Saudi Arabia, Majlis Tahqiqat-e-Sharia, Lucknow, India, Islamic Fiqh Academy of Rabta Alam-e-Islami, Al-Majlis Al-Fiqhi Al-Islami of OIC, Council of Islamic Ideology, Pakistan. So, a major conclusion of all these fora is, according to these fiqh bodies, conventional insurance is unlawful because of involvement of prohibited elements like riba, qimar, gharar, unlawful appropriation of others' property, aklul mal bil batil, and violation of law of inheritance in case of life insurance. So, after having the opinion of all these fiqh bodies, if today some scholars say that I don't think this is un-Islamic, so this may be his individual point of view, but more weight should be given to collective wisdom instead of individual opinion. So these fiqh bodies defined that what should be the Islamic substitute, that the Islamic substitute of conventional insurance according to these fiqh bodies may be some scheme based on mutual cooperation and joint responsibility. So this alternative is introduced under the title of Takaful in recent past. Takaful pioneers. Takaful started some 30 years ago in the Middle East with the launching of two companies in 1979. The Islamic Arab Insurance Company in the UAE, and same year one company, the Islamic Insurance Company of Sudan, was also introduced. But it took some time for the movement to take shape. Later in 1984, Malaysia played a pioneering role in setting the first legal framework specific to Takaful, that is Takaful Act Malaysia. This was instrumental in the successful launching of the Takaful movement in Malaysia and other countries of Southeast Asia. Other markets such as the Sudan and Iran have Islamic regulatory environments and become naturally Takaful markets. In Pakistan, Takaful Act is enacted in 2005. In the Gulf countries, specific Takaful legislations are coming through in Bahrain and in Saudi Arabia. From a handful of operators 2 decades ago, the Takaful movement has blossomed into a fast-growing phenomenon in many Muslim countries, with very promising prospects in other countries with a large Muslim community. Takaful drivers, that what was the driving force for Takaful to come into existence. This movement is driven by, first, a strong demand from a public who would not insure otherwise because of religious belief, and the successful development of Islamic banking institutions providing capital and Islamic financial instruments for asset management and investment. So actually, these were the Islamic banks which played instrumental role in bringing up Takaful companies, and they have provided their support in establishment of Takaful companies in various parts of the world. Even the very first Takaful company, which was initiated in Sudan, major shareholder was Faisal Islamic Bank Sudan for that Takaful company. Islamic banks and financial institutions play a strategic and important role in the distribution of Takaful products, just as bancassurance played an important role in the distribution of personal lines insurance products. Banca Takaful is an important driver for Takaful. The number of Takaful operators worldwide is now estimated at around 150 Takaful companies operating in 40 countries. 10 re-Takaful companies have been established and 6 conventional reinsurance companies have established their Islamic windows. So this is providing opportunity for Takaful companies to write business at larger scale, because this was a bottleneck for Takaful companies previously, but now that problem is getting easier for them. Takaful is one of the fastest growing segment in the insurance at around 20% per annum on average. World Takaful contributions are conservatively estimated at around $3 billion, of which 60% in general Takaful and 40% is in family Takaful. Geographical spread of Takaful is like this: Southeast Asia around 56%, Middle East 36%, Africa 7%, Europe, USA and others 1%. But this figure may change with the passage of time. Now, what is Takaful? The word Takaful means joint guarantee. Takaful is derived from Arabic word kafala. Kafala means one person taking care of some other person, but when we use word Takaful, this means all members of a group are taking care of each other. They are jointly responsible for the betterment of each other. The objective of Takaful is cooperation and mutual help among the members of a defined group. In a practical sense, Takaful can be visualized as a method of joint guarantee among a group of members or participants against loss or damage that may inflict upon any of them. The members of the group agree to guarantee jointly that should any of them suffer a catastrophe or disaster, he would receive certain sum of money to meet the loss or damage. All members of the group pool together their efforts to support the needy. Working of the Takaful business, the Malaysian case. So we have different Takaful models, and oldest among them is Malaysian model, which is also called as Muzarba model. So I will first explain the working of the Takaful in case of Malaysian model and then discuss the other models later on. As we know that as a substitute of life insurance, the equivalent term is used is family Takaful, and for general insurance substitute term is general Takaful. So first family Takaful mechanism is explained here, and then we'll come to general Takaful. Takaful business is based on the concept of Muzarba and Tabarru. Involvement of these two Islamic forms of business eliminates the element of riba from the insurance contract and convert gharar into tolerable form. As we know that prohibited elements which are included in conventional insurance were riba and gharar. Riba was coming because of its investment activity and because of exchange of money for money contract, and gharar was because of uncertainty, at least from one side. So now when the nature of the contract is changed from commutative contract to non-commutative, which is called as uqud-e-tabarruat, so there is no direct exchange of money for money is taking place, but unilateral donation is provided from the side of the participants, and in case of qualifying for receiving compensation, become due. So there is no contractual direct exchange of money for money. So that riba is eliminated in that in this way. And because investment of Takaful companies are in Islamic opportunities, so riba nasiya is also eliminated. And still gharar is there. Gharar cannot be eliminated from an insurance contract because presence of gharar is the very reason for entering into insurance-like contract. So, as we know that for commutative contract, fuqaha are unanimous that presence of gharar convert it into unacceptable and invalidates the contract. Whereas about uqud tabarruat, we find that according to Maliki fuqaha, gharar is not, gharar don't convert it into Islamically unacceptable form, and gharar is tolerable in uqud tabarruat. So therefore, Takaful models have tried to convert the nature of the contract from commutative to non-commutative, from uqud muawazat to uqud tabarruat. Then in family Takaful, each Takaful installment is divided and credited into two separate accounts, namely the participant's account PA and the participant's special account PSA. A substantial proportion of the installment is credited into the PA solely for the purpose of savings and investment. The balance of the installment is credited into the PSA as tabarru for Sharika Takaful Malaysia to pay the Takaful benefits the heirs of any participant who may die before the maturity of the contract. The proportion of installment to be credited in PA and PSA is in PSA from 2.5% to 13%. This range from 2.5% to 13% depending on the period of the policy and the characteristics of the policy holder, and remaining amount is credited into investment account, and that belongs to the policy holder himself. The amount accumulated in the PA is invested in various business according to Islamic financing techniques, and the resultant profits are divided between the company and the participants according to the agreed upon ratio. For example, 30%, 70% or 40-60%. The participant share is calculated according to their individual share in the PA and credited into their respective accounts, the PA and the PSA. So this mechanism is shown here with the help of diagram, that initially we can see that the contract which is taking place between participant and the company is based on the principles of muzaraba. Then participants are providing installment, which is called as installment or contribution. Then this contribution is divided into two accounts, PA and PSA. But for investment purposes, they are jointly pooled into one fund, which is called as Family Takaful Fund. And company manages investment of this fund and generates some profit. Then this profit is shared between company and the policy holders or participants, and then this is added back into their respective participants account and participants special account. The share of profit going to company, first administrative and management expenses are subtracted from there, and remaining is profit distributable to shareholders. In case of death of the policyholder before the maturity, so whatever is available in his participant's account, all amount along with the profit added into it will be given